that surge, that rocket that we were talking about. And we, by the way, by close, ended above the 20-day moving average, easily above the 20-day moving average on the Nifty. Broader markets, I mean, there was no problem in the broader markets per se, but it got better with the sort of momentum coming through as far as large caps are concerned. So, you know, we were at about 1:1, advances to declines at 230. By close, you know, that number had moved up to almost about 1.5:1. You know, a little better as compared to where we were 1 hour before close. Now, top sectoral gainers, real estate did very well, and the IT index did very well as well. Now, IT, of course, is a bit of an underperformer. Real estate, no such problems, but there was momentum there. You know, this entire manufacturing, capital goods, industrials, equipment, power equipment, that theme continues to run and run wild. Today, for example, there was a new area with a subsector within that entire space, bearing companies which participated. Schaeffler, Timken India, SKF India. So every day, I mean, the market is rotating into newer names, but the broad banner header, if you want to sort of describe what's happening, is sort of capital goods and manufacturing. Surabhi.
Oh, yes, absolutely. That's still very much a strong theme. And in fact, perhaps in some senses, it is the theme of the week. Just want to go back to talking about the volatility and this literal pole vault that we had from the market. And, you know, I just want to highlight some stocks where it was really very evident, very apparent. So Mahindra and Mahindra obviously also went home as the top Nifty winner. We'll talk a lot more about the stock as we go forward. But the moves were sharp. I mean, there was a positive move after the results, yes. But then, you know, 3 o'clock onwards, it just took off. Ditto for ITC, ditto for something like an Axis Bank. So a lot of these heavyweights together helped the market stage a very, very dramatic recovery in just about 15 to 20 odd minutes. The advance decline ratio actually also improved because, you know, around 230, the mid-cap index was barely up about 0.3% or so. But then things, look at that, the lines had crisscrossed. There were more declining stocks than advancing stocks, but everything turned. The whole mood of the market turned after 3 o'clock onwards, and we had a close of almost 1% on the mid-cap index. And last but not the least, I just want to talk about the sectors that contributed. Large cap space, yes, banks definitely played a part. But overall speaking, today it was IT, real estate. These were very strong pockets of the market, and also consumption. Lots of consumer stocks moving in that last half-hour bounce. So lots of drama playing out, literally. Well, let's tell you what we've lined up for you on the show today. We'll start off with telling you a little more, some more color on this you know, dramatic move the last half hour that I was referring to. So we'll have Hormaz joining in with all the action. Then, of course, it's been a very action-packed day with lots of companies in focus. M&M, HAL and GAIL all reporting Q4 numbers. We'll get you all of the details. And then, of course, our segment comes up, The Street Chatter with Nimesh. Today, he'll tell us why Apollo Tyres was in focus in today's session. And, of course, last but not the least, tomorrow, well, is not the last trading session of the week because Saturday is working. But anyway, we'll get you all the cues for Friday's session as well. But to kick it off, as always, let's go across to Hormaz. Hormaz, plenty of drama today.
It's very difficult to put an adjective to a market like this, but the bottom line is that the bulls had a good day and that's where it ends. And starting off with IT stocks, and those received a boost yesterday after hopes of a Fed rate cut increased in the US, and as a result of which the IT index traded higher. All constituents ended with gains. Emphasis, Tech, Mahindra, LTI, Mindtree and Infosys were among the top 5 gainers on the Nifty as well. All of them ending at the highest point of the day. That is a bigger takeaway from that. Infosys also contributing 2.2% to the Nifty upside. A sector that did very well was defense, and that is courtesy of HAL's numbers. And if you see the charts here, after the HAL announcement, all other defense stocks zoomed in equal proportion, be it Bharat Dynamics, BEL, Mazgaon Dock, Data Patterns, all of them ending with gains of anywhere between 1.5 to 3.5%. But HAL, record highs, closing in on 5,000, 10% higher after a very strong fourth quarter. Surabhi just mentioned about real estate, and that was another sector that stood out in today's session. Not all of them on the index ended higher, but before that, we'll get to some earnings impact as well. Honeywell Automation, as Prashant was highlighting earlier, some stocks that did well. Titagarh Rail, NCC, Mahindra and Mahindra after the earnings, and Mankind Pharma, some not so good reactions to the earnings there, 4.5% lower, bucking the trend in an otherwise strong market. And real estate, as I was mentioning, not all stocks ended higher, but a good day nonetheless. Oberoi Realty almost 9% higher, Suntech, Brigade, DLF, Godrej Properties, all of them doing well. And lastly, PSUs continued to do well as they have been, regardless of how the market texture has been. PFC and REC continuing to lead the charge. ONGC, BHEL and IRCTC rounding off the day. Back to you.
Okay, all right, Hormaz, thank you very much for that. Indeed, lots of action on the street today. Well, we have Mayuresh Joshi of William O'Neill with us, as well as Shilpa Rout of Prabhudas Lilladher. Let's do a quick dive with them. Shilpa, to you first. I don't know, I mean, how intraday traders are surviving this level of volatility. But tell us, what do you made of this, last half-hour move, and what's the advice on the indices now?
Talking about the indices, yes, the roller coaster ride that we saw today. First, the slide towards 22,000 mark, and then again the 200 points up move. This indicates that in the near term, 21,800 to 22,000 will act as a crucial support. And as long as we are holding that, we might see that levels of 22,500 to 22,800 coming in. Likewise, Bank Nifty, as long as we are holding 46,800, we are good to see levels of 49,000 and more in coming days.
Okay, all right. Shilpa, hi. Mayuresh, hi. Mayuresh, just a quick word on the entire rally that we saw in capital goods. Once again, and I was listing out, specific areas, specific subsectors from one area to the other, right? I mean, ABB, Siemens have had their day. I mean, they continue to have their day. CG Power, big rally, almost 1 lakh crores in market cap. Today came off a little bit. A lot of the industrial bearing companies like SKF and Schaeffler, etc., doing very well. What's going on? I mean, is the spends here, of course, are very good. But if one wants to take fresh exposure, what's the best area?
So afternoon, Prashant. No, I think the numbers have been doing the talking for these stocks. Look at the numbers that ABB has posted. I think decent set of numbers, in fact, spectacular set of numbers. SKF India within the bearing space, very good set of numbers. So to that extent, domestic cyclicals, domestic capex-oriented stories, whether it's in manufacturing or infrastructure, expected to continue doing well. Robust order books, expectations of strong orders expected to continue, albeit with a quarter's lag as elections are around. These orders are coming with decent margins, and most companies are executing these orders well as well, which is reflecting in very strong cash flows and return ratios. So to that extent, valuations is one aspect which is sky high for a whole host of these companies. But I think numbers are expected to continue, and even on a higher base of FY24, they can do a very decent show for FY25, FY26 based on these factors. Within the bearing space, again, I think SKF, decent set of numbers, trading above key pivot levels, the EPS rating is decent, expectations of more products being introduced. You go through their annual report and you'll see a whole host of things that SKF is expected to do in the coming few quarters. The industry size itself is expected to grow at a very, very decent pace with electric vehicle adoption happening. And therefore, I think these bearing companies also having a large part both from the automotive and the industrial part of the business. Again, I think as a subset, a few of the piping companies, infrastructure companies like Welspun Corp, Jindal Saw remain on our radar. Our viewpoint is that orders are decent. They will continue growing at a good pace. They are executing it well. And therefore, the operating leverage along with cash flow improvement can be quite substantial and significant for both these companies in the next couple of years.
All right, got that. Well, stay on. We'll have some more questions for you. Let's quickly move on and talk about our first stock of the day, and that has to be Mahindra and Mahindra. M&M reported what looked like a pretty good set of numbers for the fourth quarter, beating street estimates. At least, their automotive segment, the passenger vehicle space, looked quite good. Sonia is here with a more detailed analysis. Sonia, take us through.
Well, thanks a lot for that. So the M&M earnings were above street estimates. As you rightly pointed out, it was a mixed bag this time around. While the auto segment was very strong, it's the tractor segment that has been under a bit of pressure. This time around, the company has lost market share in the tractor segment. So the Q4 tractor market share came in at 39.4%, which is down about 130 basis points year on year. But it was more than compensated by a very strong performance in the auto segment. The UV segment continues to be very strong, highest ever UV volumes at 126K in Q4. Now, if you look at the overall numbers, right, a revenue growth of 11.2% is what the company saw. The EBITDA went up 12%. The margins were largely flat year on year, but the profits went up 31.6%. If you look at the margin trend as well, despite the kind of weakness we've seen in the tractor segment, M&M has managed to hold on to margins above 12% for 3 consecutive quarters now. If you look at the breakup as well, the auto segment, as I said, very strong revenue growth and margins have actually improved to 8.8% versus 7.1% last year, while the tractor segment margins have fallen to 15.8% versus 16.4%. The company has also approved an investment of 12,000 crores in Mahindra Electric Automobile, which is one of its subsidiary, and this is in order to fund its electric vehicle business over the next 3 years. Back to you.
The EV race is hotting up. Large investment outlay from Mahindra as far as the EV side is concerned. Same with earnings. GAIL was down about 3% after reporting a weak set of numbers. There was a miss in revenues and underperformance in the gas marketing segment as well. Sonal is here with the fine print. Sonal, over to you.
Thank you so much for that. Well, yes, it was a top-down miss for GAIL, led by the revenue miss and followed by the miss in gas transmission and gas marketing EBIT as well. Petchem segment, however, did well for the company on a quarter-on-quarter basis. Let's look at the revenue growth. It was actually a decline of 5.5% versus an expected decline of 4%. EBITDA was down 7%, came in 200 crore lower than the poll, and margins at 11% are lower than the poll of 11.6% and on a sequential basis as well. Profits were down 23.5%. The other income component also declined on a quarter-on-quarter basis. That led to some more dip in the profits this time around. Let's talk about the segmental EBIT now, because it's the national gas transmission business which saw a decline of 19%. National gas marketing segment saw a decline of 26%. The petrochemical segment did well. It was up sequentially at around 323%. LPG was up 26%. But other segment, which has the CGD business, which has the E&P business, there was a provisioning made of around 170 crore rupees, and that's why there was a loss this time of 70 crore rupees. Q4 was a miss, but remember, FY24 was one of the best years that GAIL has reported in its history so far. So yes, weak Q4, but strong end to FY24.
Okay, all right, got that. Thanks very much for that, Sonal. Well, let's just quickly head back to our guests for a comment. Mayuresh, come in. I mean, if you have a view on GAIL, then please share that. And also comment on Mahindra and Mahindra, because the stock is really playing catch up. I mean, if 2023 was all about Bajaj Auto, 24 is being more about, catch up on both Hero and M&M. Your view?
Absolutely. And again, I think the expectations in terms of building up the EV vehicle part of the business in terms of the production numbers and the supply numbers thereof of almost 10,000 odd units, doing incremental capex on the farm equipment solution business. And the existing PV business is doing phenomenally well. So I think the new launch has already garnered around 50,000 odd hits. And the existing platforms also have been doing phenomenally well. Recovery expected in the farm equipment segment with normalized monsoons expected will lead to decent volume growth for the tractor business along with improved margins, and therefore the console numbers will look far better as we head into Q1 and Q2. Therefore, I think the kind of investments that are happening in the right direction. They are obviously front loaded, and as capacities start coming up in the next few quarters, they will incrementally add to earnings. Very strong EPS RS rating for M&M. And therefore, anybody holding should continue holding on. For GAIL, again, I think numbers a little bit soft, as Sonal just explained. I think the key factor here is going to be more consistency in terms of delivery across all their 4 segments. But it's highly improbable. I think one of the segments will underperform at some point of time, understanding the chain in the commodity cycle that they probably work out of. But I think still strong cash flows is what they generate, decent enough dividend yield. And therefore, anybody holding GAIL should continue holding. Maybe softness might continue for 1 or 2 verticals, but that gets compensated by the other verticals as well.
Okay. Well, HAL is the next one. It was up 10% in trade. They reported a very strong set. I think the stock is up some 12 times in the last 4 years. So incredible performance for HAL, stock price-wise. And numbers on the financial side also continue to keep up. Margins were the big surprise. Upasana is here with the fine print for the numbers. Upasana.
The company has reported a strong revenue growth, beats street estimates. The company has reported a strong revenue growth of almost 18% on a Y-on-Y basis versus 13% is what the street was estimating. The margins have also expanded sharply from 26% to 40% on a Y-on-Y basis. And in terms of PAT, we are seeing an uptick of almost 52% and it stands at 4,309 crores. The company's order books also looks healthy and strong at 94,000 crores with additional major orders expected during FY24 to FY25. Company says that despite major supply chain challenges arising due to geopolitical issues, company has met the expected revenue growth of 11% versus 9% in FY23. The company has also received fresh manufacturing contracts worth 19,000 crores and repair and overhaul contract worth 16,000 crore in FY23 to FY24, aiding such a strong revenue growth.
Upasana, thanks very much for that. Mayuresh, any thoughts here? HAL?
No, so phenomenal numbers. I think the operating performance speaks for itself at 40-odd%. So I think they are having a very strong revenue visibility over the next few years with an order book of more than 90-odd thousand crores. But because of strong execution that is happening at their end, a large part of that is getting reflected in margins, the absolute EBITDA number, and the bottom line growth as well. Will these continue? Absolutely yes, because I think the platforms that they are working out of are expected to still grow at a very, very decent pace. Even the helicopter part of the business and the platforms thereof as well are also expected to grow quite significantly. So I think they are achieving scale in terms of revenues. There is operating leverage that is clearly getting played out. And again, all these factors are getting played through in terms of very strong cash flows that the company is reporting. Obviously, the price action has been stupendous over the last few quarters as well. So to that extent, trading well above pivot levels as we see it. But anybody enjoying the momentum should continue holding on to the stock. As we said, O'Neill, and as also discussed in the closing bell show, I think the market itself should determine the stopping out for investors as well. So I think keeping a stop at the 50-day MA, if it cracks with extremely heavy volumes, that might be your exit point. Till that point, I think one can enjoy continuing the momentum.
Okay, all right. Mayuresh and Shilpa, thank you both very much for joining us. Lots of earnings, lots of fundamental analysis to go over today, along with a very volatile market. Well, with that, let's move on. Take a quick look at some of the key corporate voices that we heard today. First on our radar is Colgate. The management projected a price growth between 3 to 5% in FY25. It is seeing early green shoots of recovery in rural consumption, and premiumization continues to be the trend for urban consumption. The next company on our radar is Berger Paints. The management sees revenue growth of 8 to 9% in the current fiscal year, and EBITDA margin is expected to be around 16%. The company also says that it will see 2 to 3% differential between volume and value growth.
Well, we also had the management of Dixon with us earlier today. And the company said that they aim for revenues to be between 30 and 32,000 crore rupees as compared to just under 18,000 crores, which they did in FY24. They're also expecting margins to be steady between 3.9 to 4.2%. IT hardware, according to them, is a big opportunity. And here they say revenues are seen between 4,000 to 6,000 crore rupees by FY26. Titagarh Rails is the other company who we spoke with, of course, after results. And here we kind of focused on the passenger coach business, and they're expecting a higher share of passenger coach business as compared to FY25 going forward. They say that between 60 and 65% of the total revenues could come from the passenger segment. Talking about margins, they expect margins here to eventually, after backward integration, etc., to get to between 13 and 15% going ahead.
And with that, it's time for a very quick break. We'll come back on the other side with D-Street chatter, as well as all the events to watch tomorrow. Welcome back. You are with us on Markets Forward. Now, as promised, let's quickly get to our segment, D Street Chatter. Nimesh is here, as usual, with all the insights from dealing rooms. Nimesh, I don't know if there's ever a dull moment. I don't know who can, take a break, because you take a break for 15 minutes and you're looking at a completely different market. And that's what happened today.
Well, absolutely. 200 points of intraday swing at least 4 times in the day. And finally, the market ended at day's high. So that was the kind of volatility we've seen in the market today. In terms of, thankfully, the market ended at day's high. In terms of individual names, the first stock on my list is Apollo Tyres. That stock sharply came off day's high despite multiple upgrades and buy flows. I understand the street is now fearing a large block deal, a potential sell from a private equity investor very soon in Apollo Tyres, and hence that stock ended at day's low. The second stock was CG Power. Even that stock was under pressure today after multiple block deals. I understand the domestic mutual fund was a seller in today's block, so disclosures could be quite interesting there. The third name is Sona BLW. That's been consolidating in a narrow range of late, but now I understand the selling pressure from a leading domestic mutual fund is largely over, so watch out for delivery volumes in that particular name. And the last one is Manappuram Finance. Even that stock ended at day's high on very strong buy flows, so looks like some interest is back from larger FIs, and expect high delivery volumes in today's market in Manappuram as well.
Okay, well, thanks very much, Nimesh. Interesting list as always on D Street Chatter. Well, what to expect as we come back tomorrow? That's the question. Abhishek is here to answer that and provide some of the key events that we'll be looking out for. Abhishek.
Well, Prashant, to begin with, US jobless claims data is expected to rise. So that data will be important to watch out for. RBI tomorrow will come out with their fortnight update on banks' deposit growth and, loan growth, as well as forex reserves. So that will be a key thing to watch out. In terms of dividends, there will be interim or final dividend, which will be coming out from Advanced Enzyme, Craftsman Automation, as well as Nico Park. Stock split is there for Vardhman Polytechs, which will split from face value of 10 rupees to 1 rupee. In terms of results, which we are in the thick of result season, so watch out for result calendar in terms of tomorrow. Astral, Balrampur Chini, Bandhan Bank, that was down sharply in trade today. GSK Pharma, JSW Steel, NHPC, Shipping Corporation, as well as Sobha. Back to you.
All right, Abhishek, thank you very much for that. And with that, it is a wrap on this edition of Markets Forward. Many thanks for watching, but don't go anywhere because news and updates will continue right after this short break.